Hi, I'm Mehdi Sanderji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. Adam, how you been?
I've been good, Mehdi. I've been good. Coming at you, crypto revolution from the United States, which sounds a little odd, right?
From the USA.
Yeah, crypto revolution from the USA. It sounds, I don't know, backwards, ironic, whatever it is,
It,
oxymoronic, something like that.
it does, and we'll get more into that later in the show. But before we get into things, don't forget to like and subscribe if you want to stay on top of our content. And as always, feel free to drop us a line if there's any topics you want us to explore. Adam, I feel like we're recording this on a Wednesday, 10 a.m. Eastern, whatever it is. And I feel like we always come into things strong on Bitcoin. The last couple of weeks have been solid. And then by the time this goes to air, things have kind of sold off quite aggressively. So I don't know if it's us. If it is, I apologize to the crypto world out there, but we'll try and do our best to make sure that things are compass mentis and status quo, and we have no material effect on anything.
Yeah, well, it seems like it's been a good last week, right? There was a little bit of a dip. We had the finance news last week, the CFTC finance news, and then we had a little dip here, and the last few days have been pretty decent in terms
Yeah,
of Bitcoin price, in terms of ETH price. ETH price
yeah.
actually shot up quite a bit yesterday. If you want to go technical, it broke through this $1,850 level that it was trying and finally just bursted up through there. So maybe there's a little bit of a turn there in ETH. So it's been decent. We'll keep watching it. Again, it's kind of been back to that correlation a little bit with NASDAQ prices. But what we've seen, Mehdi, and I know like we don't have any articles to bring up right now, but some of the things that I've seen that I thought about is Bitcoin right now has its highest correlation to gold that it's had in like 5 years.
That's it, and there's more and more chatter around gold as well. So we're seeing both these things kind of move in pari passu. There's a word term I haven't used in a long time. Uh, but yeah, so we're seeing that side of things, and there's also as we move into the macro part of the show, there has been more concerns around traditional fiat currencies. We're talking about gold and Bitcoin kind of doing quite well, but I wouldn't say the US dollar's been under fire, but there's just been a lot of you know for as long as I can remember, and forever and ever, it seems the US dollar has kind of been this global standardized currency, whether you're dealing in crude oil, you're doing global transactions between Brazil and China, it kind of gets done via the US dollar. And some of these larger countries, whether it be China, Brazil, Saudi Arabia, people are now saying that we shouldn't be utilizing the dollar as that standard. I don't think, as much as China would like it, I don't think I see the yuan being adopted globally as that comfortable currency that everyone's happy to use for global transactions. But where does this start bringing a bit more eyeball and focus on things like Bitcoin for these types of global transactions?
I think it definitely it puts a little bit of focus on Bitcoin. It puts more focus on things like blockchain technology and cryptocurrencies and ways that you can transact outside of the standard banking system, if nothing else. And we know that China is building this digital yuan, or they've already released a digital yuan, right? So if China is the world's leading trading partner and you want to transact with China, then and they want to use a yuan, then guess what you're going to do? If you're a country that relies heavily on trade with China, you're going to kind of have to play by their rules, just like everyone has kind of played by the U.S. rules. And we saw it a bit last year, where different parts of the world saw when the U.S. and the other G7 countries got together and said we're cutting Russia off from the banking system. And I think there are probably other countries that go, okay, at what point are they going to cut us off from the banking system, which is denoted in dollars? We better have a backup plan. And China's coming in with the backup plan, right? They're going, you buy all your stuff from us anyway. Why are you going to go through this old banking system with the dollar, with the country that is forcing all their rules on you when you can use ours? We're happy to accept it, right? I'm not saying that's the right thing to do. I'm not saying they should do it, but I think you and I talked a little bit, Mehdi, about it last week, Mehdi, which is so much of that reliance on the dollar is based on United States property rights. The idea that the United States legal system will enforce my property rights, and that includes my dollars, right? And that's a big part of the value of the dollar. And all these kind of up and coming countries, these developing countries that now have an economy and they're dealing with China, they don't necessarily have the history to go, well, why shouldn't we deal with China? What are they going to protect my property rights? They maybe don't have that history to say, maybe that's not the best thing for us, because they're going, look, 80% of our trade or 70% of our trade is with China now. We're going to deal with the yuan because it's just easier, simpler. We don't have to go through these convoluted banking systems that are going to take out all these fees and all this friction. We can go straight with China with their currency. And they're not going to be thinking of, you know what, China can kind of take my money and my stuff anytime they want.
That's there's definitely, I'm sure there's a lot of people pondering these conversations right now and chewing the fat on this and seeing the pros and cons against every scenario. And there's obviously a ton of cons come up immediately. Just one being that it's China, but there's a lot of pros as well. And the fact that it is being globalized, and people are losing faith on a global basis. I'm not saying that I am. This isn't me talking for anyone in particular, but we can see that there has been a lack of faith in the US dollar over the last several months, years from different countries around the world. And they are looking for an alternative. That's why these conversations are happening. So we'll see how all this kind of pans out.
You're right. Like that's where Bitcoin comes in too, is what's the alternative? If let's say I'm not trading with China, but I just need an alternative to holding the dollar because I'm not confident in the value of the dollar. I'm not confident in my money in a banking system in the US banking system right now. Well, where am I going to go? Well, I'm not going to go buy yuan. I'm not going to go hold my money in that. But an alternative is Bitcoin. It's outside the US banking system. I can hold it myself. And it's got this limited supply. All the things we talk about Bitcoin that we like, it has all that. So you probably do have investors flocking to that. Again, not necessarily for trade purposes, but now they're seeing the benefit of having that asset.
Well, we'll definitely see how all this continues over the next coming weeks, months, and probably years, to be honest. Um, Speaking about investing in a lot of this technology, whether it's blockchain, the crypto assets, a lot of people have shied away from these direct investments, and we're also seeing that with what's happened in the banking industry and there's a lot of concern in not concern there's a lot of reticence in actually putting your money where your mouth is and investing in some of these things right now. Just at the moment things seem to be on hold. One that isn't on hold is Ledger. They just raised another 100 million plus in funding, and Ledger is providing the wallets for a lot of these crypto assets. And I've spoken to people who have said, I don't understand enough about blockchain, I don't understand about crypto, I can't invest in it. But what I do understand is that all this stuff feels like it's going to stay there. What people are going to need is a secure way of maintaining their assets somewhere. And Ledger seems to be rising as that gold standard. What do you feel about Ledger? Do you think this is the gold standard? Do you think that people are right in the way that they're approaching these things? Is there a bigger picture here? Is it just even forget just I can store my Bitcoin on Ledger, but is there a bigger picture that we can evolve into utilizing this technology?
I think there's a much bigger picture. I think there are several different parts of it. Right? One, we're starting to see this migration of people going, I want to hold Bitcoin. Like I see why there's value in Bitcoin in particular, right? And it could move on to ETH and others, but you and I will talk about Bitcoin for the time being. I see why there's value in Bitcoin because I saw what happened to banks last month, and I don't. One, I think the U.S. might devalue the dollar, and I think my money's not that safe sitting in a bank. Therefore, what can I do? Well, I can hold Bitcoin and I can hold it. I can utilize self custody. I can utilize a wallet, the technology where we hold crypto assets. So that's where we're seeing some uptake. But in addition, Mehdi, we're seeing so much of the new innovation around Web3 and around cryptocurrencies. We saw it last year with NFTs. We're seeing so many other things that people want to hold their assets that once they get into the idea of I can self-custody, I can hold on to my own Bitcoin, what else can I hold on to? And once they've started down that road, it's not likely they're going to come back. And Ledger is the biggest player in that market. They're the biggest player in here's how you hold your own crypto assets, or here's how you hold your own on-chain assets. You can use our devices, you can use our technology. We talked last year about Ledger hiring, I believe, the person that developed the first iPod, that he helped them create a ledger that I believe is about to be released, finally released soon, that looks very much like an old iPod. It's a touch screen. It's actually really cool. I hope to get one at some point. But we're seeing Ledger move in that direction. And as we see more and more reason for people to custody their own assets, Ledger is the biggest player. And so, as you said, there are friends of people that you know that go, look, I'm not ready to invest in Bitcoin yet because I don't fully understand it. But I understand that Ledger is the technology behind how people might custody their assets, custody their data, more importantly, custody not only their assets, their money, the things that they own, like real estate or like art or music royalties, but also things regarding their identity and their health information and everything else. That's going to be held on a public blockchain. And the way I make sure I have access to it is a wallet, and Ledger is the world leader in offering those wallets.
There's definitely a lot more applications that we can see kind of evolving over time. Not just as you say, here's my Bitcoin, I'm going to put it in this wallet, but you just mentioned your medical records, your housing, your everything that you could possibly imagine can ultimately be on chain, and then we can maintain and self custody that data as well. So that takes us away from some of the bigger players that are obviously very keen on collecting that data right now.
Exactly. But look, the investment, the money that venture capitalists continue to throw at Ledger shows this feeling that they have. I assume based on a whole bunch of due diligence and data, although I shouldn't assume that anymore because there were only a few problems with due diligence last year, but that we are going to still see more and more people throughout the years move towards self-custody, and Ledger is that device. So the fact that all this money is going into Ledger again, and by the way, they held the same valuation as they held when they did a raise last year. No other blockchain companies that I know of have maintained or increased their valuation. Most of them have gone down. Ledger's actually held their valuation, and that's a pretty big deal.
That is a very good point. I did see that, and good for highlighting that. Not to reference the big banks, but Citi has come out with a pretty decent report highlighting how the tokenized securities market could reach $4 trillion by 2030. That's quite an uptick in volume that we can see from here, and it's interesting to see because surely much of that comes from the detriment of the traditional banking system.
I think it somewhat comes to the detriment of like the traditional banking / custody system. Yes, and it's the overall system, Mehdi, of custody plus exchanges and those being separate. So, and I'll tell you this, Citi's not the only one that's seen this, right? Larry Fink has said it. Larry Fink, CEO of BlackRock, has said he sees the promise of tokenized assets, whether that's real estate assets or real world assets or whatever we want to call them, because of the efficiencies they can create, because it allows you and I to transact some sort of private investment without having to go through all these custodians and all this legal headache and everything. We saw Boston Consulting Group had a report last year that said they think it could be 16 trillion. So they're 4 times what Citi thinks in terms of tokenized assets. I've been talking about tokenized real world assets for several years about how that's going to bring trillions and trillions of dollars on chain. And the reason is because private assets, whether it's I own part of a private company, real estate, private debt, anything like that, dwarfs the public equity markets incredibly. So if we start getting those assets, and keep in mind those assets are custody in various places, it's extremely inefficient, it's extremely illiquid. If we can add some efficiency and add some liquidity there, then bringing those markets on chain is going to be kind of a no-brainer. We have to put in the legal aspect, right? The legal aspect that says if it's a real estate, how do you match up the fact that I own it by denoting it on chain versus I own it by denoting it with title with my county, right? Those kinds of things are going to have to be rectified. But bringing what are considered right now off-chain assets on chain is going to be huge, and that can be public securities, it can be private securities, it can be private debt, it can be real estate, it can be invoices and cash flows, right? You can see companies that are going to have their cash flows on chain, which means they're going to be able to factor those and have that be a much more efficient market. So we're going to take, I mean, when you can take 3, 4, 5% out of that market, that's just fees that go to all of those intermediaries, that's a monster number. When you talk about whether it's 4 trillion or 16 trillion, take 4 or 5% and add that back into the economy, that's huge.
That is quite massive. And just imagine all these Wall Street analysts might be able to get some of their earnings estimates right on some of these publicly traded companies if there's more on-chain data.
Exactly. Yeah, I didn't even bring that up, and that's a really good point, Mehdi. Is the transparency of this is going to give us so much more access and so much more ability to determine what the valuation is. So when you and I exchange part of some sort of private asset on chain, you buying it from me are going to be able to look at the history and transparently decide for yourself what the value is for you. And and honestly, the managers of that company, they don't care that you and I are transacting because they don't have to do anything. Right. So it's going to be much more efficient. There's going to be much more transparency. People are going to really know the value of their assets a lot better. And if I put my financial advisor hat on, that's huge for financial advisors. It's huge for accountants to be able to understand the value of those assets so much easier without having to rely so much on, the quarterly statements from some of these providers.
And the ironic part is, it would actually make the IRS's job a lot easier in managing the tax side of things as well. They've got everything on chain. You can see exactly what, where, who, how, and might even do away with K1s and all these types of things for private investments, and it
So
all goes on chain, and you're done.
there's so much irony into how this technology actually makes the government's job easier and
So
safer,
much easier.
and they're not seeing it.
Yeah. Well, hopefully at some point they'll get there. But that kind of segues us nicely into the regulation side of the conversation. So, yeah, great article this week about the US diplomat to Washington saying you're becoming obsolete in one big area of tech policy. And there's a link to the article here. I would urge everyone to read it because it lays out very nicely about the progress in blockchain, crypto, all this new technology that we're kind of talking about, crypto assets, blockchain and technology, anything and everything to do with this, how it's being adopted and advanced in different countries around the world. And it feels like, the US/Washington is kind of being left in the weeds. And, is it more of a matter of continued bureaucracy, or is it a lack of understanding in this new asset class, would you say?
I would have to answer that as yes, because it is both. I think it is somewhat a lack of understanding. And look, it is the article, and I believe the gentleman's name Brandon Pawson. I hope I'm pronouncing that right, but he's serving at the U.S. Embassy in Tokyo currently. He's been at embassies elsewhere in Asia and in Colombia, and in between he worked at Consensus, which admittedly is a crypto company. But what he's saying is, based on his posts in these other countries, they are progressing with this technology much more than we are. And I will be honest and say a huge part of that is the fault of the crypto industry. We made it completely financial. We made it all about trading. We made it about how can I get 100 times my money? How can I get 280% on my dollar? How can I trade NFTs? And in doing so, a lot of people lost money. There were a lot of scams and frauds. And so the U.S. government is going, whoa, whoa, whoa. Our job is to protect people from losing money in scams and everything like that. Therefore, we are going to look at mainly the financialization of crypto, and we're going to try to regulate that almost to the point that we don't want to do anything with it anymore. And that seems relatively obvious with all the enforcement actions, with all the actions by the OCC and the Fed and the FDIC and everyone else very recently. But what I feel like they're missing out on is, one, as you and I have already talked about in this conversation, there is so much more to crypto, Web3, blockchain technology than just money, than just moving money back and forth. That's a huge piece of it right now, but there's so much more to it. It's essentially just storing data. And it just so happens that my money is data. The ownership of my assets is data, but my medical information is also data, my identity, where I went last week, my travel, all of those things are also my data. And and what Web3 is doing is building the next version of internet that's going to store that. Right now, all my data is stored with Google and Amazon and Facebook and Chase Bank and United Airlines and my county and my doctor and the hospital and everything else. That's who stores my data in their little silos. And if you'll remember, Mehdi, the funny thing is, a couple of years ago, Congress took Mark Zuckerberg to task for selling Facebook data, for selling our data. And here we have the technology that allows us to own it ourselves and not have to rely on Mark Zuckerberg and Facebook to hold on to it. And they don't like that either. So I'm not quite sure where the middle ground is, except more regulation, right? More bureaucracy behind, just slapping Facebook and saying, you can't do this anymore, and we're going to watch you. But what this diplomat is saying is we are missing out. Like this, we were very good about capitalizing on the internet. We were very bad about capitalizing on silicon and on chips. We were very bad at capitalizing on 5G technology. We have the chance to get back in this, to get back in the Web3 world and actually make the US a hotbed for it, because we obviously have all the money to invest in it and we're not doing it. And if we don't do it, someone else is going to fill the gap. And it looks like China's doing that. Dubai is doing that. With various other countries, Switzerland's kind of jumping in. The UK is jumping in a little bit. And we're being left behind because we're so focused on, we think it's a scam and don't let anyone lose money. Or we're focused on, we don't want Bitcoin to be the alternative to the dollar or something. But there's probably lots of different fronts that the US is worried about. But what they're missing out on is the bigger picture of, this actually solves some problems, and other countries in the world are going to take it, and we're going to be left playing catch up.
Well, I think that kind of sums it up. Unfortunately, that bigger picture is being a little bit left behind, and there is a lot of catch up to be played. But as we roll into my favorite part of the show, the application part, you touched on it as well about NFTs being utilized in everyday, travel and anything that we want to do. A low-cost Argentinian airline is replacing their tickets with NFTs. How easy is this? What a great and simple application for NFTs. There was so they in their statement that they put out, which was quite interesting. They said it offers, using NFTs instead of tickets, offers a more flexible travel experience that allows passengers to even buy in advance without having to define their travel plans or who the travelers will be. Now, I think it's awesome that we can do this, we can manage this, we've got our own little airline ticket. I think where some of the regulators' little hairs on the back of their neck go up is you can't define who the traveler is going to be, because obviously there's an element of vague element when you book a plane ticket. There is a peripheral KYC type questionnaire, like who is traveling, name, who they're traveling with, etc., etc. Does this raise concerns that you think are valid, or do you think that we should kind of steamroll this?
I think we have to look at how things are working, actually in practice. So what you're referencing, Mehdi, there, I think, is TravelX, which is the company that
Yes.
actually NFT technology, versus the airline, which is actually utilizing the NFT technology. So my understanding is, yes, TravelX creates the NFT technology that says, theoretically, I can just essentially buy, it's essentially like buying points, right? I can buy points. I can buy a flight, and I don't even have to let you know who's traveling or anything. But if I'm going through the airline, well, yeah, the airline has to know who I am, right? So TravelX gives like this generic travel NFT, versus the airline that's saying, we have to know who you are, so that when you show up with that NFT, we have to make sure it's you. And even if I buy one of these plane ticket NFTs, and then I say, you know what, I'm not going to travel, I'm going to put it up on the market, the whatever, Buenos Aires to Houston flight, I'm going to put it up on the market. And Mehdi comes in and says, well, I want to buy that because I don't have to go through the airline now. I can buy it from Adam based on the market for that flight. Well, now you are going to have to get in through the airline's website, which has, in banking terms, we call it KYC, but it's going to have to figure out who you are. So when you show up at the airline with that ticket, you're going to have to prove who you are anyway, right? The airlines still have some regulation. It's the actual denotion of that ticket of being able to fly on that plane at that time that is going to be the thing that's malleable, the thing that's going to be able to move from wallet to wallet. Because if you've ever flown and had to cancel a flight, which I believe you've had to do recently, or had to change a flight, you have to go through the airline system, which anyone who's ever done that knows it is the most frustrating system. Unless you're super elite status and you have an 800 number to the CEO of the company or something, it's a super frustrating process to go through, because you're basically having to give your money back to the company and then buy whatever they have available, which might be at whatever price they want to make it, right? So it's very much like all the other aspects all the other companies I've talked about. Once you're using their database, you're 100% subject to their rules, to their prices, to their fees and friction and everything. And this is saying maybe we open up that marketplace just a little bit, right? And just a little bit means, Mehdi, I can sell you my ticket. I can sell you my spot on that plane. And you kind of tell me what it's worth to you, and I'll tell you what it's worth to me to sell it to you. And isn't that a better transaction? Isn't it better? And as long as you show up with, here's my NFT ticket, here's who I am, you know who's flying, that should kind of satisfy regulators.
And ultimately, if all of our identity and all of our information is on chain and we have everything in one little ledger wallet, you can just turn up, you've got your NFT, you've got your digital passport, and it's all tied together, and everyone's hunky dory.
I was hoping you would pick that up and lay it down, Eddie. I was
There we
hoping
go.
we've been doing this long enough that you knew exactly where to go with it.
Well, on that positive note of a frictionless society, Adam, as always, I want to thank you for your time and sharing your thoughts on crypto.
Well, happy to be always good to share the thoughts from the US or wherever crypto is available.
And to our viewers, don't forget to check out Adam's courses on digital assets and crypto education. The website is down there or there. And don't forget to subscribe to Your Finance TV. Until next time, good luck investing.